Hi, I'm Scott from Solace Financial, and this is a video market update for my clients, friends, and family. This is just a little bit of a recap of what's gone on in markets this year, and then also my predictions for 2026 in markets. So the Australian market is only up for the year about 2%. The US market is up 8.4%. That's their overall market. But what's interesting is their technology market, the NASDAQ, is up 20.1% for the year. And that's really based on the expansion and growth in AI, what we call the Magnificent Seven, so the top 7 big technology companies over in the US. And what I can say is for our clients, most retirees picked up a return of about 7.5% this year. We've had an over allocation to the US this year. We really have had a fairly under allocation to Australian shares, one of the lowest that we've had. And we just have some concerns about the current value of the Australian market and also our productivity levels. The earnings per share growth in Australia is really quite low compared to the rest of the world. So we kind of see better value elsewhere. So the projections for 2026, sometimes I get asked, what's the market going to do next year? To be honest, I have no clue. And anyone that can tell you what the market is going to do next year is pulling your leg. And it's because we can't predict what's going to happen in the future. I don't know what Donald Trump is going to do regarding tariffs or potential wars or conflicts or economic policy decisions. And all of those things have an effect on the share market, both positive and negative. Back in 2002, when we had Bali bombings and corporate crooks over in the US with Enron, our market and the US market fell a lot. I couldn't predict that. In 2008, there was a lot of rating agencies that were giving false and misleading information about the property market in the US and the amount of debt levels and income levels, and that caused the global financial crisis. I couldn't see or predict that. In 2011, there was an earthquake off the coast of Japan, which caused a tsunami and a nuclear meltdown. That also caused our markets to go down. That caused about an 18% downturn in the market that year. And then I can't predict things like pandemics, which in 2020, our share market dropped 30%, and it really did have the ability to go a lot further down in those years. So that's why projecting the market is very difficult to do. But what we do know a fair few things. The Australian share market, we currently have a price to earnings ratio of about 20 in the Australian market. Our long-term history is 15, which is telling us that our market is a little bit overvalued compared to long-term history. Also, our earnings per share growth isn't great. There's a lot of red tape. There's a lot of cost involved for some of our businesses in Australia to continue to increase profit. And we're also very limited with our population. There's only so many sales you can make in Australia before you have to go international. The US is also facing a fairly similar issue. Their market is trading at a relatively high price to earnings ratio of 27 now. Their long-term average is about 17. And that's really pushed up by the NASDAQ and a lot of these tech companies, which are producing these great AI inventions, with ChatGPT and Copilot to help create efficiencies and reduce costs in businesses and all of those things. They are spending a lot of money in that area. And the hope or projection is that the profitability of those companies goes way up next year and the year after, which justifies the high price. On the other side, emerging markets, so we think India and China, their price to earnings ratio is really quite low at about 15, which is in line with their long-term average as well. So we do see better value there. If there's a downturn in markets, some of the ones that are overpriced might be hit a little bit harder than those. Or if there is a pickup, then there's a lot more expansion ability in the price on something that's more reasonably valued, like the emerging markets. It's also a difference. What we do know is there's a difference in the size of companies in different markets. So the really big companies in Australia and the US are really highly valued, but the mid and small cap areas are actually quite reasonable, and we're seeing a lot of good value in there, which is where we kind of have our portfolios more positioned and focused now. So for 2026, I hope that there is no emergency, no big unknown that causes any market crashes, but we're always looking out for those things to react very quickly to reduce risk if we see those. But at the same time, we're also looking for opportunities to increase profit and get those returns and give our clients a good, smooth, steady return. Our 3 rules, which we've always had and are the same today, is don't put all your eggs in one basket. It's just an oldie but a goodie. It's talking about diversification. The second rule is moderation. We don't take unnecessary risks for our clients, so we can be here for the long term. Moderation is also about not going too hard, not borrowing a lot of money, not trying to hit the ball out of the park with huge unnecessary risk and returns. And the last rule that we have is flexibility, both for our clients and on our side. Things on our client side of the fence often change, and we need to react fairly quickly to help solve those issues, or to provide more money, or to provide the flexibility that they need to adapt to their lives, but also flexibility on our side. Markets change, politics change, interest rates change, and we need to be able to act quite quickly to be able to take advantage of those things, but also safeguard our clients' money. That's it for this month. Wishing everyone a very Merry Christmas and a Happy New Year. My last day is on Friday, but I always check my emails over Christmas anyway. So if there is something that comes up, please feel free to email me. You will still get an out of office reply, but rest assured I will be watching them anyway. Thank you very much. Have a Merry Christmas.